Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. It's Friday, so we're all in a good mood this morning. We got a great show for you folks today. A lot of earnings. American Express, PayPal, Skechers, E-Trade, Procter Gamble, Honeywell, Schlumberger, some ratings to discuss as well. Disney, eBay, a whole lot more. We have AIG commenting on the hurricane charges. We have DuPont with some weird trading action. We have options expiration to discuss. So a lot to get to. Our guest today is Nate Tobik. He is for the founder of CompleteBankData.com. He is a bank analyst, so he'll be able to break down the earnings from the big banks and the regional banks and any kind of bank. So he'll join us at 8:35. And Joel, what's the word this morning in the S&Ps?
Major green on the screen. S&P's up 10.5 handles, 27.8275. Caught a bid right below yesterday's closing price of 72.25. So there's a target on the downside. On the upside, folks, I got nothing until we get up to Thursday's intraday high at 28.08. But I think we could find some resistance ahead of that. Crude rebounding from the Schlacky from the last 2 days, up 63 cents at 69.34. Gold hanging in there at 12.30, up $1.50 at 12.31.60. Silver, I don't think silver ever is going to get over $15. So unless I buy the 15 puts, that is. Silver trading up 9 cents here at 14.70. Bitcoin flat, down $5 at 63.75. Triple D, we have options expiration today. Were you prepared?
It snuck up on us here. No, you said that on the pre-market show. I was like, oh my goodness, it is option expiration. So anyways, always love the option expiration. Gets more volatility, opens and the closes can be very good. And hey, check it out, check it out, check it out.
Yes,
Joel
Dennis
gets dressed in his Michigan gear on Fridays. And look, Denny here, dressed in his Michigan gear as well. Go blue.
Go blue, go blue. We got
Cole's not liking this now. Cole just, if he was listening, he just shut the show off.
I wish Cole was here because we started to make some wagers. And I said, let me think about it a little bit. And I'm going to throw some odds at him. And Cole, if you're listening, I texted him too. We're going to talk because he is 100% convinced that Michigan is not going to win the game. So I am basically offering him free money. And how often do I offer people free
What are you
money?
offering him? Lay this out. What's the bet you're offering him?
I don't want to say anything because then he'll listen and then he'll try and come back with some odds. I want odds on Michigan winning by X amount of points.
What's the line? Do we know where the line's
Michigan's
going?
given 7.5.
Okay.
So you can imagine now, but we'll save that for people that are actually.
So you think they got this though, Joel?
Can't tell you for sure, but I'm willing. I like the risk reward ratios on the bet I'm offering. Let's put it that way. Let's just put it that way. So let's get to the markets here.
Holy cow, is there news all over the place? A lot of earnings stocks, big names, a ton of ratings. We got DuPont with a warning, AIG with a warning. So much going on here. Let's let Spencer Israel take the lead. Where do you want to go on this big news Friday?
You're going to have to stay on until 10 o'clock today. You're not going to be able to trade the open.
I trade the open because we got too much news and we got to cover every single piece of news.
Let's start with PayPal first. PayPal reported Q3 EPS 58 cents is a 4-cent beat. Sales of 3.68 versus $3.67 billion, but they're raising their guidance for the fiscal year. The EPS guidance was raised just 6 cents on the low end of the range, 232 to 238 for the fiscal year EPS. Sales guidance was also hiked up from 15.3 to $15.4 billion. So a slight guidance raise and a slight earnings beat across the board for PayPal.
Big pop here on the stock. It's up $6 here. It's holding those gains from last night. A little whipsaw action on the initial number. Rallied 2, gave it back. Then they came out with the guidance and they just started buying and they didn't stop buying. Still got this one on my investment portfolio. Probably sticking with it, but I tell you, if it got silly here today, and let's say, silliness being in the upper 80s, I would probably dump it. But And again, going to talk against my book. I don't think we're out of the woods here. Ugly day for the markets yesterday. Get the snapback rally here today. So I'm still saying rallies to be sold. It's a hell of a rally in PayPal.
Is this one that you bought at 90 because you thought it was going to
100?
Yeah.
Half position one, Joel.
Next time you do
Whenever I buy a half position, it's almost always bad. So if I say, oh, I don't know, I'm going to just buy a half position because I kind of want to own it, but I kind of don't. It's like the Mr. Miyagi from Karate Kid. Remember? Do karate. So he does the analogy to the frog or to the person crossing the road. Cross the road okay. Don't cross the road okay. Kind of cross the road, squish.
Exactly.
So remember that? Anyways, that's kind of my analogy here. Don't buy the stock okay. Buy the stock okay. Kind of buy the stock, squish. I keep getting squished on these half positions there. So Mr. Miyagi, we can learn so much from Karate Kid. And I'm giving that analogy here this morning.
And if you buy a half position when it's at 90 and you say it's going to 100.
That's what I thought. Me and Jeremy Newsom were talking, and we're like, this is going to 100. And Jeremy's like, it's not a matter of it's just a matter of time. And I was like, you know what? I agree to. I think it's going to 100. It did not get to 100, and it's selling off. And obviously, the overall market is what's taking it down. We've got multiple analysts thinking it's still going to 100, though, so they still agree with me and Jeremy. I think it can eventually get to 100, but right now, everything Momo is out of favor. Snapback 6-point rally here, PayPal. I'd like it to get up a little bit more. I might actually sell it, but we'll see. We'll see what I'm going to do, but it's a big rally here.
Oh, Dennis, you love one number and one number only, 84.84. That happens to be your exact pre-market high. Well, let's call it after hours high. I stand corrected. And that matches to the tick your October 5th high, which was my birthday. So that is just a great level. The longer it takes to get to 84.84 and into the 85 handle, I'm looking for a fade here, but that's a great number. A lot of price discovery going on right here between 82, 82.20 and 83.20, but got to get up into that 85 handle or I think we'll fade.
Yeah, and a couple questions from the chat here coming. Jazz asking me, do I add to my losers? Sometimes in the investment portfolio I do. More often I don't. And on my trading, I never ever add to losers. So day trading, no. Swing trading, no. In long-term investing, sometimes, but it seems to not work out. So I don't know. I take a half position saying if come down more, I'll buy more. I usually never do, and that's why maybe I should stop taking half positions.
Okay, all right. Spencer,
yep.
Keep us going.
PayPal also announced a partnership with American Express, who themselves reported earnings after the close yesterday. Q3 EPS $1.88 versus $1.76 estimate, sales of $10.1 versus $10.05 billion. They also raised their fiscal year guidance. EPS guidance raised from $6.90 on the low end to $7.30 on the low end. So a 40-cent guidance hike for the fiscal year EPS for Amex, plus the EPS and sales beat for Q3.
Which stock did you go to?
I know, it took me a while.
AXP.
It took me a while too. He went over it.
He went off the board a little bit here. That's okay. We were going to talk AXP. It was on the board to talk. 105. Let's see what it does there. 105, and I'm going to go look at the book while Joe breaks down the technicals, but I probably just took his number. Multiple highs just under 105. That's your level of resistance. I'm going to say that is where it's trading right now in the pre-market, just under there. So I say 105 is your resistance point.
One day, I missed one day, and you don't even need me anymore. You already taking all my content.
No, we need you for all your lighthearted wittiness and jokes. That's
okay.
What we need
I mean, we
need you for your numbers.
104.90. We're bumping up against that level. You have a 2-day high of 105.29. We're just holding up here. SPOOs are helping it as well. I see a lot of air. If you can clear that 105.29, you have 107. You have 3 highs right at 107 from mid-month. So clearing 105, staying bid with one of Dennis's big iceberg bids is good for this. If not, little fade. Don't think we'll see yesterday's close at 102.84 unless the market really goes haywire.
Just gonna go look in the book here for 1 second and just see American Express. Nah, nothing in the book, but it's early, so maybe those institutions are hiding their orders. I feel like there's somebody willing to sell at 105, so we'll see what happens at 105.
All right, let's go to one of the big ones of the morning. That's Procter Gamble PG reporting Q1 EPS of $1.12 versus $1.10 estimate. So a 2-cent beat on the EPS. Sales $16.69 versus $16.51 billion. So beats for the EPS and sales for the Q1. They also reaffirmed their organic sales growth guidance for the fiscal year.
It's an expected move on this one, Joel.
Less.
That's a big move.
Yeah, it's a stupid move.
It's just, you know what? I say fade too. Up at 84, 84 and a half. Maybe it gets to 85.
It goes to 85. If it goes to 85, I don't want to say I'll wear a Michigan State shirt, but if it
it went to 84. It could go anywhere. But I'm looking 85, 63,000 shares in the book. So major resistance up there. Not that it's only already traded 83,000. I don't see much at 84, 19,000. And, I'm looking through the NYSE open book is what I'm doing. And I'm looking for it through in the pre-market here, trying to determine where the institutional size is. 85 and 86, they laid some out. 63,085, another 68,086. I don't think it's getting up there either. But I'll tell you, if it did, I'd have my shirt and shoes on.
Yeah, you just 84.41. That was your high back at September 25th. Man, I'm sure a lot of people would like to. 83.99 was the prior day's high. So if you've been sitting on this thing, watch it go under $79, and then whoosh, it's back up here to 83.84. I don't know what Wall Street's going to do. I don't know what the day traders would do. If I had this stock, I'd be ringing.
Day trade still on huge lists and a lot of stocks that we're really worried about. I mean, maybe not Procter & Gamble so much, but this is like the Kraft Heinz thing all over again. Remember that Kraft Heinz on the report went up 10%? I was like, wow, don't look, what's your saying? Don't look a gift horse in the mouth or something. Anyways, it popped so much so fast. I was like, I'm selling it. And I did. I was happy I did it because I sold it like 63 or 64 that day. 3 days later, gave it all back. I think if I don't own Procter & Gamble, but I think if I did, I'd ring the register. Just my opinion.
You know what it kind of feels like, because we've had the whippiness from the last couple of days and the upside and downside actions. Now you had options expiration. It just looks like, some of the market makers and some of the, the big houses, it just kind of feels like they're just propping this.
Jamming it up
today. Then everyone's going to buy, and then they're going to flush them down the toilet. It's kind of the way it feels. I mean,
pop and drop.
Yeah, that's what we'll see. I mean, pre-market high 85.50. We're only $2 away from there. So I don't know. A lot of juice, a lot of money being made overnight here. A lot of money being lost too on the put side, unless you'd sold them, of course.
Another one that fits this bill is Skechers. Q3 EPS 58 cents versus a 52-cent estimate. Sales of 1.17 versus $1.22 billion. So a miss on the sales, a beat on the EPS. Their Q4 EPS guidance was higher by a range of 2 cents to 7 cents. The sales guidance for Q4 was also slightly higher, $1.1 billion versus a $1.08 billion estimate. Their comps for the quarter were up about 2%. Stock is popping, and it kind of fits what you were just saying with Procter & Gamble.
The stock is always wild on earnings, and it usually has follow through. So when I see it up 2.5, I think it could be up 3.5. So I've been fading Skechers before. I think when I had the last report, I think it was down. It had reported, obviously, you can see the big gap in the chart. I think it opened that like in the pre-market, like it was like 28, and then it was 27, 26. It went all the way down to $23. So it gets wild, and there's flushes in this thing. That being said, that $30 level looks like a brick wall.
This stock had to go up. I've bought 2 pairs of Skechers.
Had to go up.
In the last 6 months. I don't think I've bought 2 pairs of shoes in the last 6 years. So that's a good sign.
Why buying so many Skechers?
Because I needed a little bit. I was wearing out all my 10-year-old sandals, so I had to replace them couldn't find the exact pair I bought 8 years ago, and Skechers had a similar summer shoe. And then I went hiking. I needed some new hiking shoes out in Montana. So
look at you. And they do everything now. Swim, hike.
They were cheap.
You start biking, you can do like a triathlon.
I hate running.
Go hike the running part of it.
Anyways, let's see here. We got over $29. $29.45 was your pre-market high. Just hanging here in the mid 28 handle. I'll be keeping an eye on 29. Let's see. When's the last time we were over 29? We got over 29. 28.89 was a high on September 10th. Previous day's high was 28.85. Over 29, this is in full breakout mode. 29, I see as resistance right now.
All right, jumping over here and looking at a million other stocks that are moving this morning. Should we move away from the earnings parade just for a second? We'll come back to earnings. Don't worry. There's a lot of stocks to talk about in earnings land, but talk this Dow DuPont here. Give us the headline from last night. This thing got killed, came all the way back, is almost back to scratch. What was the headline, Spence?
That an impairment charge related to DuPont's agricultural business will have no impact on previously announced guidance. So, wow.
So, no, stop. What was the headline? What about the 4.6 billion?
But that won't have an impact on the guidance, is what they said.
They said that this morning?
That's what that, yeah.
Okay, so last night, this announced a $4.6 billion impairment charge.
But it won't have.
And the stock goes down to under $55. So they're like, well, 4.6 billion, killing it. Now they're saying it's non-cash. Now they're trying to, talk it back up. And you're seeing the stock, obviously. Well, this was a little bit afterwards last night, actually. And the stock lifted. And the stock is back all the way up here now to 57.89. So they murdered it. And then they're like, it's only one time. It's not going to, affect their guidance here. So they're walking it back up. Interesting, Joel.
Yeah.
Guess they didn't like the pricing action under 55.
No, they whacked it down, made a double bottom on after hours at 54.75, 54.95. So that's a real good area. If we do go into reverse, we're climbing our way back. 58.50 was the high in the last bracket. I think, on a day like this with so much news and everything, you got to keep an eye on that closing price of 58.56. We're still above that. I'm sure a lot of people would love to see it scratch. That took it home overnight. Also, the daily chart just doesn't look so hot, so maybe you had a washout low and you're on the rebound here. But this one, you had a trading range for 6-7 days in a row. Big news back in that trading range to let it consolidate.
I also had one more warning last night, and that was from AIG. It's a hurricane warning. Spencer, details.
Yep. They announced a Q3 pre-tax catastrophe loss of between $1.5 and $1.7 billion.
And this was from which hurricane?
Oh, I didn't see which hurricane. I just thought they said it was due to the hurricane season. I didn't see a specific one.
I thought they mentioned a specific hurricane, but that's okay. Anyways,
matter.
Regardless, AIG trading down. Own this one in my investment portfolio. Had in there for a long time. It's starting to get real ugly. So it has been in the 50s forever. This is serious breakdown for AIG, and this has me actually concerned from the long-term investment portfolio because go out to the monthlies and take a look. I mean, we've basically been, and this has been a key support, this $47, $48. Going back to 2014, 2015, 2016, 2017, 2018. And we're breaking down here now. And I bought this thing back in 2012. So I got that big run up from 2012 all the way up to 2015. Now I'm looking at this thing and I'm like, starting to give like half of my gains back. Obviously, we got up to the $67 area. Wish I would have been selling up there. Now it's down to $47 area. So, I mean, I need some diversification. I don't mind owning the odd insurer. And I think AIG is a pretty good one. But, man, this chart is ugly.
Hey, Dennis, diversification doesn't mean that you have to have losers in your portfolio.
I wish you know what? Why didn't you tell me that years ago and I wouldn't have had any losers in my portfolio, Joel? That would have been ideal. So I didn't know. I thought you're supposed to have some losers in your portfolio too.
Okay, your pre-market low comes in at...
I tell you, man.
This
is what we need you for, the comic relief here. Even when I'm losing money on something, you can find a way to make me laugh.
You know what? Because I want to, like, a lot of people complain that you complain, right? About your losers and everything.
I'm a complainer.
But who takes abuse better than you? I mean, that's the thing.
I get mad.
That everyone...
I try to. But who takes meetings better? There's a few people. I still get mad when I lose money. I like losing. Nobody likes losing money. Nobody likes losing.
46. Even
I could have like 10 winners there, and I have the one loser, and it's a loser I'm looking at. So nobody likes losing money.
I guess I'm just conditioned to it because when I worked on the floor and there were brokers and there was traders, and do you know that in all the years that I worked on the Merc, not one trader or one broker ever made a dime? No one. No one
They
ever
all
made.
complain about their losers.
No one ever made any money. Not one day trader, not one broker.
Sports.
Nobody ever made money on the floor. That was the daily mantra. 46 even is your pre-market low. You're getting $1 bounce. You're taking out monthly support here as well. So you're going back to levels 45. No, where do I have to go back to here? 45.94. That was your low back in August of 2013. So I'd be more comfortable saying if it comes back down to 46, you'll have support. Hard resistance would be the bounce off the pre-market low, and that comes in at 47.40.
All right,
Can we
back to
bring
the
out?
earnings parade here. A couple other ones quickly to talk about. Let's go Honeywell. It's getting a big pop here in the pre-market, assuming Honeywell's earnings were very good.
Q3 EPS $2.03 is a 4-cent beat on the estimate. Sales of 10.76 versus 10.75 billion. So the Q3 numbers came in just higher than the estimates there. They actually cut their fiscal year sales guidance from 43 billion to 41 billion on the low end of the range. The EPS guidance was also lowered from $8.10 to $7.95 for the fiscal year. So a guidance cut for EPS and sales for Honeywell. So interesting, the action this morning.
I got a level for you here. And I'm just looking, and it might be solid because that 160.50 high back on the 17th, Joel,
Yeah.
I go to the open book.
50,000.
Do you know how much stock is there?
200,000.
100,000 shares offered at 160.50. So that coincides with that high.
Yeah.
That makes me think that order is solid.
I agree.
So 100,000 shares of Honeywell throwing out an oddball number like that, that's significant, guys. So anyways, it's got to go through there to go higher, 160.50. That's going to be a resistance point. If that order does stay there and if that is solid, and usually, when you see a high coinciding exactly with that, it makes me think it is. Wow, 100,000 shares at 160.50. Write that one down.
Okay. Quick question from TT Mac. Can you go over Micron with their large buyback in place? Where on the chart would they be buying back stock?
You want to know something?
What?
I sold part of my Micron.
You did?
Yeah. I sold it last week. It got up to like 42.5 or $43. It had a little pop that one day. And I was like, I had bought more stock at 45. I sold the extra stock that I bought. So I'm now down to like a half position in Micron again. Why did I do that? Main reason is because I took those two huge winners, the MasterCard and the Harris Group, and I was like, I need to find some losers. I don't have a ton of losers in my portfolio right now. And I was like, well, I'm down this Micron. I'm going to take part of this loss because you know what? This could just be another value trap. I'm in a few of these. I got stuck with the Ford, sold half that one. Obviously, I was in the GE value trap for a while. I don't know. I like the Micron still. That's why I stuck with part of it there, but I lightened up into that rally. It is getting a lift back. I still like the stock, but man, it is not performing well.
Boy, oh boy, it is just hovering. I can just tell you what the low of the move is. Low of the move is 40.68. You made a low, went off the board at 41.30. So if you're trying to swing trade this, I have no idea if the Griffin says the buyback doesn't go into effect until 19. I can't verify that, but if you're leaning on this, lean on the low of the move at 40.68. I just don't like that it's hanging out here so so long. So boom on the upside here. Double top, and you're $2 away from that. Your 2 and 3 day highs are 43.35 and 43.39.
Can we talk about?
Go.
Can we talk about Yandex? Some people in the chat, the YouTube chat, asking about Yandex.
The well-behaved chat.
The well-behaved of our two chats.
Yeah, the Google chat.
They're all the
Google chat.
I know there's a little bit of we had some arguments going on this morning. Try not to argue, guys, if you can. I mean, it's just a chat room. Everybody's obviously always going to have differing opinions on stocks.
Yeah.
So, I mean, that's why there's a buyer. That's why there's a seller. Let's try to respect everybody's.
We're all just trying to learn here. But Yandex, this is interesting. So there's a report that a state-sanctioned bank, state-owned bank in Russia is looking to take as much as a 30% stake in Yandex, which is the major or one of the major social search engine companies out in Russia. And Yandex has had some very interesting trading action the last couple of days.
Boy.
What's up? I mean, it goes and loses like 25% yesterday. Now it's bouncing here this morning. What's the news that's bouncing us back here this morning?
I don't know if there's news that's this.
That's just a bounce back. You know what? Bounce backs and stocks that have candles like that the day before, in my opinion, are to be sold.
Yeah, that's a gift there. Real bad.
I think so too. Getting some money back. There's a million people stuck in this thing. I'm of the opinion that I'm fading that rally.
And if it get, I mean, there's someone really trying to get out here at $32 or just under that. You have several 15-minute highs between 31.65 and 31.89. So if in fact it could clear 32 with gusto, and that was also a former support level, which is kind of interesting. $32 area held for a long time. Old support now, new resistance above 32. You got some room to run here. But as Dennis said, a lot of people stuck on this thing from yesterday and be looking to get out at a decent price.
Let's go VF Corp. We get those?
We did get those earnings. VFC this morning, Q2 EPS $1.43 is a 10-cent beat on the estimate. $1.33 was the estimate there. Sales for the second quarter, $3.9 versus $3.86 billion. So beats for the Q2 EPS and sales. Again, raising the EPS guidance is VF Corp. They're raising it from $3.52 on the low end of the range to $3.65. They narrowed their sales guidance, but still raised at $3.6 versus $3.7 billion on the low end of that. They also are raising their quarterly dividend 5 cents from 46 to 51 cents per share.
90.
Yep. I was just looking at that too. Yep. $90 seems to be the high in the pre-market. You just traded up to 89.90. 90, boom, right on the nose there. 89.99 to 2-day high. That's potential resistance.
And also, oh man, there's just so many earnings stocks. It's actually, we didn't have a ton. There's a lot of big companies reporting. We had Schlumberger, we had ISRG, we had E-Trade reporting. We had Cleveland-Cliffs report. We had a lot of regional banks. Let's go to the regional banks for a second, because Bank of the Ozarks, well, what's going on? OZK here just getting annihilated. It's down 22%. What did they say? Did they say that like Jason Bateman's going to come and like start running the company or something? What's going on, Bank of the Ozark?
That was a Netflix joke. A Netflix show joke that I don't think Joel got. Q3 EPS 58 cents, down on a year-over-year basis from 75 cents last year in the third quarter. So they're catching a downgrade this morning, at least one downgrade. I saw the one from Raymond James, but a year-over-year decline in EPS is not what you want to see. We're going to talk to Nate Tobik about this in a few minutes, but let's look at the chart first.
Not much to look at here. Trading on the lows of the pre-market session here, 26.71. You're only 14 cents away from that. Let's see what we go. I'm looking here on my monthlies. I see 26.77. That was your low back in December of 2013. So if you're looking to cover short from that time, there it is. Your next monthly low is 24.36. This one, if you absolutely have to buy it, maybe wait, the open, let it go down another buck or two. Then if it comes back and flushes through the open, but going to back to historically low levels here for OZK.
Let's look at Cleveland Cliffs, because they did also, on top of the earnings, they announced a dividend this morning. So the earnings were in line, 67-cent EPS. Sales beat $741 versus $722 million, but they announced a 20-cent dividend, quarterly dividend for CLF.
CLF trading up 32 cents, $11 stock. I haven't looked at this one for a while. I do trade it, actually. I just don't look at a chart of it. It's funny, I do a lot of trading without charts, but uptrend here going. You get a little lift up.
Wow, I got really excited.
I don't see much here.
12 and a quarter. Pre-market high, backed off here to 11.78. Let's see here. A bunch of highs at 12. 12 even, 1209, 1203. So boom, this gets buck over 12, holds 12. Greener skies ahead. You have got a recent high of the move at 1304. So holds 12. I'm looking for 13. Can't clear 12. Look for it to give it a little bit back.
Trying to work on some stuff on the side as I'm doing it here. So I'm somewhat distracted. Just taking some trades. Ratings. Go to ratings. Million of them.
Joel, he says go to ratings. I guess that means we have to.
Or wherever you want to go.
We have to go to ratings. No, he said so. So let's do it. A lot of ratings land this morning. I'll pull up a calendar here in a second. First, let's look at where's the one? Disney catching an upgrade this morning from Barclays to overweight. They also announced a $130 price target for the House of Mouse.
I own it in my investment portfolio. I love this stock. I'm just looking from a chart perspective. I think this is going to eventually make new all-time highs. I mean, we know the parks are always busy. They've got other stuff cooking there with the Fox deal. I like Disney.
Nice trade, up 187 at 118.05. I think Spinner was talking about this one when Scott Redler was on. He was showing some excellent relative strength. Proving it today, up $1.87, 118.05, 118.10. That was the recent high of the move. So boom, above that, you got a breakout. Oh, what's the old-time high in this thing? The old-time high is 122.08, but 118, definite area of interest here in the House of Mouse. And Dennis, before we keep going with that, what about imbalances here on this options expiration Friday?
Let's go check it out. Usually those are wild there on option expiration. I'm trying to bring them up here right now. To the sell side, again, it's so early here, though. It's so early that those are going to flip around. So one thing I will say is we look at the opening imbalances every day on the show. On the third Friday of the month, they're so exaggerated and they can get so big sometimes that they just flip around. I mean, one institution comes in and they all change. So they're very volatile. So just because you see sell imbalances right now, they could all go to buy imbalances in another 5 minutes. So as of right now, we're seeing some sell imbalance. The only one standing out to me is Square, 126,000 to buy. So Square actually is a buy imbalance. But other than that, I think I don't put a lot of weight in this, not at least until we get to like 929. 59, like 1 second before it opens, and you're like, okay, yeah, these sell imbalances might hold.
Okay, all right. Quick question here about eBay. Did we already go over eBay, or was that PayPal?
That was PayPal. But eBay had was an upgrade. It was an
upgrade?
No, it was a downgrade this morning to hold from Stifel, and they lowered their price target to $35.
Whew. Take it out.
Yowzers.
Yeah, wow.
They're taking down 6% on a downgrade? Yowzers. That's a big move.
Is that it? Is there any other news?
I know. That's what me and Joel are looking. It's like, really? Stifel has some influence, but holy cow, that's significant influence. Is it to sell?
Let me pull my calendar here.
It's too short.
What?
No, I'm joking.
Did they downgrade to sell?
Wait, where's my downgrade to hold? No.
They downgrade to hold, and the thing's losing 6%. Wow, man, I don't know if there's another headline here or not, but wow, that's a big move.
Yeah, just hit 29.60 here in the pre-market session. We have not been under $30 since January of 2017, 29.51 low there. So if you're looking to bring in a short here, let's see what happens at 29.51. Really can't give you much under that. Coming back on the upside here, I'm sure a lot of people would like to see a gap fill at 31.30. That was yesterday's low with a close of 31.86.
All right, you got Roku catching an upgrade at RBC. Let's quickly do this one because Roku is getting a big lift here. Big call from an analyst followed well at RBC there. Stocks up at 59.15, pre-market up $2. Joel, 2 days of pain. Now you're getting a little bit of gain. What's your thoughts?
Roku, let's see here. We're trading up 214 at 59.15. Prove to me you can take out yesterday's high at 60.74, and then it really opens up. But still, $1.50, $2 away from that. So still using yesterday's high as a target. Above that, you had the big range day. And just one other thing I'd like to point out here, like closing prices, we talked about them a lot. 60.84 was the close on Wednesday. Your high on Thursday, 60.74. Never went green on the session.
All right, it is 8:35. We're going to take a quick break and grab our guest for the day, Nate Tobik. He's a hardcore bank investor. He runs a website, CompleteBankData.com, where he packages a ton of market data on the financial sector, and he can break down the regional banks for us. He can break down the big banks for us. So we'll be right back in a moment with Nate Tobik. All right, welcome back, everyone. As promised, we're joined by Nate Tobik, investor and founder of CompleteBankData.com. Nate, how's it going this morning?
Good. Thanks for having me on, guys. I'm happy to be here. Let's talk some banks.
Yeah, let's talk some banks here. First of all, I just want to ask you about your book. You wrote a book not too long ago. Just tell us about the book that you wrote and how sales are going and who's it geared for.
Yeah. So put out a book. It's called Bank Investor's Handbook. And really, I wrote a book that was the book I was looking for when I first got interested in banks. And so I wanted to put something together that helps people who understand how to analyze financial statements, but banks are a mystery, and breaks down how a bank works, how to look at it, why you'd want to invest in a bank. So, I guess the main thrust of a bank is, this is essentially a levered bond fund, right? And the bonds are small credits, hardware stores, construction projects, houses in a local area. And so the credits the bank is exposed to really determines how it does. And, it's kind of a good segue into Bank of the Ozarks, OZK this morning.
Yeah, let's talk about that one. Oh,
murder.
My gosh. Talk about that one.
Yeah, I mean, I think I came on about a year ago and I said this was my favorite short, and it still is. There's a long way to ride on this thing. So, I mean, just a few things. They wrote down they wrote down two credits from 2007, 2008. One is a mall that they claim that Sears going under is what impaired this project. I'm a little skeptical on that, and I'll say this: if you're a mall and one store leaves and you can't pay your note, that one store wasn't your problem. That was a bad location to begin with. So we've got a bad credit there. And then there was another project in North Carolina. It's a housing development. They said they've had this for 10 years. They haven't been selling the lots, and new developments are underpricing these guys. So this was a project they lent to. I think one thing on that is these guys started in 2008 during the financial crisis. They bought this land. And if you're buying land and starting a project in 2008 and you still can't price houses on that land 10 years later, that's just a really poor project. So I think this is just a little bit of a look into what they have in their portfolio. These guys are really heavy in construction lending. They're really heavy in every hot market. So New York, Miami. I posted something about them on Twitter yesterday, and a bunch of people started sending me messages saying, hey, I have a friend who does development in, Nashville or wherever. And they say, watch out for these guys because their lending practices are terrible. And, yes, it's anecdotal, but when you start to hear that and then you start to see the credits, it doesn't take much to topple these guys.
So you're not buying the dip in this one here. Do you have a target on the downside?
So I think this is it's going to be a zero once we hit a recession.
Wow.
You could ride it all the way down. And I say it because they have so much commercial real estate in hot markets. If you look at the default rates on construction lending from 2008, if they hit anything close to that on some of these hot markets, their capital's gone. And, a regulator doesn't let the bank go to zero. So you don't have to destroy all your capital to be in receivership. So there's also, interestingly, was an article in Bloomberg, and their CEO was quoted as saying he doesn't think there's any risk in their portfolio, and they have zero bad credits. So, when you've got someone who is running a levered bond fund and they say we have no risk at all, and they're in all the hot markets, I think that's, there isn't a bigger red flag waving. So, if you look at their earnings, earnings dropped. They said they're starting to move out of the some of the commercial real estate, the construction stuff, and they're filling that gap with RV lending and boat lending. So, they made their money doing kind of conservative stuff. Then they jumped into this. They jumped into the the construction and real estate, and now they're going to do boats and RVs. They're just kind of chasing wherever they could get yield, whatever's hot. And I just think ultimately it's a zero. So you could short it outright. Right now,
up until
today.
Do you have a position in it, Nate?
Yeah, I do. I buy the options on it because
it ain't the calls.
What's that?
It's not the calls.
Oh, absolutely not. The multiples on the puts were insane, and there was no premium to these things up until recently. So you could buy these for literal pennies, and you could have a real nice return. So right now, I would say, the volatility is going to be going up. There's going to be a lot of activity around these. If you want a new position, maybe an outright short, but I would wait on the puts until some stuff settles down and then get in that way.
Nate, Dennis, I can't talk this morning after this Ozark on this zero call, but anyways, is there any other banks on your radar here that you think are in trouble? Or, obviously a lot of the banks have not performed well, especially some of the regionals too. What other banks here on your radar?
So for the zero, I don't have anything else that's as blatant as this. I think there's going to be a lot of opportunities. A lot of people have become overextended in some of these markets once we start to see some recession cracks. I'm not short any other banks at this time, but I think the thing is there's a lot of guys who are going to get crushed who they don't have good deposit franchises. And so that's what we're starting to see as rates rise and net interest margin is shrinking because a small bank that went further out on the curve and they just don't have great deposits, they're going to be squeezed like crazy. And if they can't grow their loan portfolio quickly, earnings are just going to fall off a cliff. So that's kind of what we're watching. I know PNC just reported recently, and the big headline with them was loan growth came in well under what it was supposed to. And I think that's what we're going to start to see. So so that's good and bad, right? So if PNC is conservative and they can't find good loans to make, then that's kind of a leading indicator. I don't know if I would consider PNC conservative. They have been kind of out there, I don't want to say making cowboy loans, but they've been known to make some sketchy credits as well. So, if they can't find growth, I think there isn't much left to squeeze at this point.
Nate, let's talk about the loan growth in the bank's loan portfolio. I brought it up to you yesterday. You've been hearing more and more about this as rates have been going up. How do you look at a bank's loan portfolio and their loan growth?
Right. So, most banks, they have a specialty, and there's the thrifts doing the mortgages. That's going to be tough as rates come up. And then there's banks doing business lending. I think the best spot for a bank to be right now is business lending, and for a couple reasons. First of all, when you're doing business lending, you have business deposits, and those accounts pay almost nothing. So there's almost no cost to those funds, and you have a better return on those loans. So a bank that I like is CBB Bank, which is the ticker is CBBI. And these guys are out in California and in Texas now. And so in terms of growing, you could either grow by new business relationships, and that's stealing market share from someone else, or you could find new business formation. And at this point in the game, it's mostly stealing credits from other people, making better offers, making more attractive offers. And you need a seasoned investment team to do that. And so when you have lending officers who are experienced, who know how to make these loans, who have an existing book of business from where they came from, they're going to grow nicely. And that's what they're doing, CBB Bank.
We're on the line with Nate Tobik. He's an investor and founder of CompleteBankData.com, also author of the Bank Investor's Handbook. Let's talk the big banks right now. JP Morgan comes out with some good earnings. That kind of takes a hit. Bank of America comes out with decent earnings. Rallies a little bit, but fades as well. Goldman seems to be hanging, holding its gains. And I know I jumped from, they're all three have different characteristics, but talk to us about the big bank earnings so far.
Yeah, I mean, so big banks are in an enviable spot in some ways, in that they have a lot of levers they could use to adjust their earnings. So if you look at the headlines from this earnings cycle, a lot of it's trading revenues and investment banking activity. Different cycles, you're looking at mortgage origination, new lending activity. So, they have a lot of different levers they could use and things they could push on. And so, for example, Bank of America, I think their net interest margin is something like 2.4%, which is about 1% lower than the average for banks in the U.S. So if they're able to get that yield up overall in the portfolio or lower the costs, that's a huge push to earnings. But at the same time, they also have investment banking activity. They have trading revenue. So there's a lot of different things they could do. All of these guys, they eked out little gains. Bank of America's gain was bigger, but they were able to beat barely. I think people have been looking for much bigger beats with the tax cut, and they're looking for companies to really come out swinging and grow, and that just hasn't happened as expected.
Nate, before we let you go, last question here. Any sort of reactions to earnings that you thought were a little bit exaggerated, maybe overbought or oversold after earnings reports, and maybe you're looking to play the rebound?
Not specifically. I know right now I'm with a lot of these banks. I'd say they're mostly fairly valued. I think there's opportunities to trade around these things. One opportunity that's been out there for years is to trade into earnings. That hasn't happened as much this cycle. So you buy in and, the bank surprise. I think that trade is finally dead. And that's been going on for a couple of years now. So, expectations are so high now. I think that the better trade is maybe to be short some of these guys in the aggregate because the surprises just aren't there like we expect.
All right, Nate Tobik has been on with us. He's an investor. He's got the site is CompleteBankData.com. His book is The Bank Investor's Handbook. Nate, we don't often get calls for zero on our show, so appreciate you going out on a limb there. But thanks for coming on, and have a good day.
All right, thank you. Good day. All right.
Joel, what's the word in the S&Ps here?
We got a leak going on here. We hit 86.50. I told you I did have much resistance there in the 80 handle, so I wish I could have picked a number out for you, but we are slowly starting to get back gains here. I don't know if it's the selling balances.
It is because I'll tell you, they all went huge sells, and the S&Ps got hit the exact same time. So there's people who are watching again. If these flip to buys, watch the volatility in the S&Ps. So S&Ps are very much looking at these imbalances right now. They're all huge to the sell side. Obviously, S&Ps have given back almost half the gains here, probably because they're looking like a lot of sell imbalances on the open. I can't talk at all.
Oh,
I don't know. That's my vampire voice, I guess. But I swallowed wrong, and I can't talk here now, so I apologize. Bank of America, 891,000 to sell. JP Morgan, 322,000 to sell. Citigroup, 211,000 to sell. Procter and Gamble has 189,000 to sell right now. That's going to change. There's going to be some buyers that come in. It's up $4 still. So this shows you they don't put a lot of weight into this yet. Although the S&Ps are selling off on it, it's not like we're going to have. I think these are going to eventually flip to buy, but they're going to take some. If they stay like this, man, there's going to be this S&Ps ripping in because there are some significant sell balances here this morning.
But not Procter & Gamble. They're still pumping it up here.
I tried. Actually, I was out there at 84. Where did it just get to? Because I'm kind of
84, 85.
Did it hit 85?
Yeah. What do you?
I should have just threw the order out there. And
I can tell you where Dennis's order is at. It's either at 89, 84, 89, or 80,
well, you know how I work.
Or 84.
I trade in front of the whole numbers.
Or 84.
I don't have any order out there yet. I actually thought about putting the order, and I was like, oh, I should have been done. Oh, no, I didn't put the order. I forgot to put the order. But anyways, we talked about 83, 84. You know what? Man, I like a short up here.
Yeah, I do. Have to keep an eye on this one as the S&Ps are coming in. Spencer, did we get to cover all the earnings?
Not even close, no.
Okay.
There was a few other ones. Let's see what I had on my list. We didn't talk about. So let's do Schlumberger, SLB. They report. I don't think we did that.
Schlumberger.
Right. You call it Schlumberger. I call it Schlumberger. Q3 EPS.
That's what Joel calls it.
Right. 46 cents is in line with the estimate. Sales 8.5 billion versus 8.6 billion. So a slight miss on the sales, but in line EPS print for SLB. What are they saying? Anything notable from the call? Nah, not really.
Joel?
I'm going to say the same thing I've been saying for years on this thing. If oil's going to go from 25 to 75, and this thing is not even going to get off the mat, it's not going to go, then it ain't ever going to go. I mean, I don't know if it was a takeover they did. I mean, it's up 87 cents. You can go out and buy this one if you want, but it seems to, when oil goes up, it seems to be flat. When oil goes down, it gets hit. I mean, I just don't know, why. Just a lot of other places to put your money. I don't see why that. And I mean, Halliburton's been okay, right?
Same thing, really.
Yeah, I mean,
hasn't gone nowhere. You hit the nail on the head. This has been a fantastic environment since 2016. Oil is up from $26 to $70 a barrel, and Schlumberger in the same time frame is down. I mean, that's telling you it's the same thing like with Ford and GM. They have the great earnings, record earnings, and the stocks can't go up. If they can't go up when oil's going up, these oil stocks, they ain't going up. So I don't want to own any of these things for that reason. I know there's some people. I know Kramer's a big fan of Schlumberger. I'm fading it to him because this stock, for the exact reason you just said, couldn't go up in a great environment. Why is it going to go up? And if oil starts to come back down, it's going to be in real trouble.
Another example, what about these stocks in the housing sector? They just good earnings, pops, right? Beats. And they think just getting pummeled. I'm looking at KBH here, and let's just pull up the chart of see if this is a good example.
That's interest rates. I don't think you were on the show. That was the one you took off. We jumped into the reasoning behind this, and I mean, cars and homes, that's ground zero for higher rates. Yep. You got higher rates, there's less homes being built, and there's also less cars being bought. And that's why I think both of these sectors, when we look at the home builders and we look at the autos, I think they're both hit because rising interest rate environment, and that's ground zero.
All right, Spencer, keep us going.
My top gainer of the morning, and this is slightly filtered by price and market cap, but it's Clovis Oncology, CLVS, is up 9%. They had some good drug data this morning, good results, I should say, from their Triton program for prostate cancer, and that's what's pumping up Clovis this morning.
Nice lift. These things can be really wild. I would say if it ever got near 35, I think you got resistance at that point. These things are wild, though.
Pre-market high, double top on your pre-market chart at 34 even, 33.95. So if you're looking for a follow-through rally or potential resistance point, I'd keep an eye on $34. Coming back on the downside, you did break out from, I don't know, it really wasn't a clear breakout here. 32, I guess so. 32.01 was your two-day high. Your October 5th high was 32.06. So if you have to own it, look at 32 even to fill the gap from yesterday. It would be 31.54.
Back to the ratings, we had a lot of upgrades, a lot of downgrades today. Let's look at American Eagle, AEO. And that called an upgrade this morning from Citigroup to buy, and they announced a $27 price target.
Bet up here this morning at $21.50, which would put it up 3%. $22, I would say, had a little resistance point at the high, 22.12. It's going to get a lift here this morning, but this trend is still not your friend, so I think I'm fading it.
Yeah, $22 here. I see three highs between 21.76 and 22.12. So called 22 resistance. That's still $1.06 away. Coming on the downside here, if the market reverses and this reverses, 2074 has been your low of the move. 2073 actually was the low yesterday. Keep an eye on that for downside. And then also, man, with ways some of these other retailers have rallied over the last couple months. Once again, this is like Schlumberger and oil. If it hasn't rallied now, I don't know. Big holiday season maybe, but not a good looking chart.
Also not a good-looking chart for Harley-Davidson here, catching a downgrade from BMO Capital to neutral today. Their price target is $45 on HOG. Kind of seems like it's hanging on a cliff.
Same thing. Higher interest rates. If you're really tight for money, you're not buying a new motorcycle. And there are some people who are going to be tight for money out there. This actually does look like it's hanging on a cliff. If it takes out the 39.34 low, which is back from May of 2018, Katie bar the door. The stock's in a world of hurt. The trend is not your friend. I like this from the short side.
I'm waiting for a driverless motorcycle that to come out, really.
That's great. I love that. That's great. That might have been one of your best jokes ever.
36.
I was still laughing on that one. That was great. Tesla comes out with a driverless motorcycle. That's a good one.
36.97. That was your low back in February of 2016. Don't think we're going to hit that today, but warning, taking out the low of the move yesterday at 40.03. So there'll be your resistance point, and just above that, the low close of the move too at 40.36.
I never put on long-term short positions. I almost want to do it on this one. I almost want to short this in my investment portfolio and not look at it. That's how much I don't like HOG. No position on it here, but I don't like it at all. There's another one here too. I just had on my list. Oh, Spencer, what was that?
Was it Ford?
Talk about.
Was it Ford?
What'd you guys say right before that? You got me thinking, and then I had one. I had something exciting to talk about. Now I forget.
Was it?
It was a rating.
Was it Ford? Was it Wedbush?
Ford. Yeah, it
Okay.
was.
Oh,
So not that it's exciting, but holy cow, Morgan Stanley downgrading it here today.
Yep.
This is now $8.32. And you know what? I'm going to probably sell the other half. I sold half at $8.80 just 3 days ago. It's already down 5% in 3 days from where I just sold it. I mean, this is just ground zero two for interest rates, and I don't want to own any of these things right now. I own this. I'm probably just going to eat the loss.
It's funny. I told you I've been looking for a lease on a new car, and I've gone to every single dealership except for Ford.
I just bought an F-150. Were you on the show? I bought one, Joel.
I know you did. You like your
big
truck. I mean, I'm not gonna.
I even got the EcoBoost.
Yes.
My buddy told me not to go with the EcoBoost because there were some issues with it. I still went with the EcoBoost, so I apologize to my mechanic buddy over there because he's like, go with the 5 liter, the V8. I want the V6 EcoBoost because it's supposed to save you a ton of gas. Anyways, and I know how much my F-150 2009 was a gas hog. So I've got the EcoBoost, supposed to get like 25 miles a gallon. We'll see what happens.
All right. It's down on the downgrade here. Let's see.
And look, where do you want to find support on this, Joel? How many years are you going to go back?
I just, whenever I have to pop up my monthly here, you had an 869 low. We're below that though right now, right? We're at 838. So let me go back to,
2013? No?
No.
Farther. Got to go farther.
Financial crisis.
2010?
9.
Yeah, go to the financial crisis.
November.
When it's getting down to $1.
Ford, Schlumberger, and AEO. Those are stocks you want in your portfolio. 7-Eleven.
No.
That was a low.
That was a joke.
That
you
was
don't.
a joke.
In my opinion, you don't.
Hold out for 8. I mean, there's got to be some institutional bids at $8. I mean, that's just what I'm thinking for
Let
today.
me go look what's in the book. I would imagine there's some institutional bids at 8. You think it's the $8 next couple days, maybe?
I mean, it's
30. Let's go look. Oh, there's institutional bids everywhere, Joel. This bid side is just littered. 843, 841, 840, 825, 820. There's institutions that are saying, we like the dividend, 7%. We think the dividend is safe. I am not one of those institutions. I do not think the dividend is safe anymore. Even though this company is still making a ton of money, I think the writing is on the wall here that they're not going to be selling many trucks in the future because interest rates are continuing to
Why
fly.
does it have to be institutional bids to go long? I mean, how about institutional shorts?
Oh, there is. Let's look at the sell side. 860. 140,000, 862, 211,000, 858, 111,000 shares, all the way up. You can just look. There's just institutional size all over this stock.
Okay, we kept you over, Dennis. Sorry about that. Spencer, you want to wrap?
No, yeah, that'll do it for our show for the day. Excuse me. Now I can't talk, Dennis. And for the week, I don't know what you did to me, but if you want to catch any part of our show today, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, Google Play, or just watch the show on youtube.com/The Benzinga TV. For those of you on the West Coast, you can come hang out with me and some really cool people in the brokerage and payment space at the Benzinga FinTech Summit, November 14th in San Francisco. Go to bzsummit.com, enter the promo code PMPVIP to get 80% off your ticket. And don't forget about Benzinga Pro. It is our real-time news platform with breaking news, SEC filings, press releases, chat rooms, audio squawk, and more. If you go to pro.benzinga.com, enter the promo code AM Pro Alpha Mary Papa Romeo October, you'll get 25% off your Pro subscription through the end of the month, which is actually not that far away. And that is going to be it for us. So please remember that all the information on our show is for informational purposes only and not meant to be investing advice. Thanks to all of you in our chat rooms, both of them, YouTube and premarket.benzinga.com. Thanks to our guest, Nate Tobik. Hope you all have a good weekend, and we'll see you on Monday.